All right, guys, welcome back. So we're taking a look at NVIDIA. So if you haven't watched the previous one where I basically said IV crush, and if you listen to the video carefully, this is exactly what we were talking about. No matter what they report, market will be selling this thing and it can just stay in this range of 140 and 150. So far, we have from that earnings report around 9% pullback. And if you take a look at today alone, 4% pullback for NVIDIA. And if you take a look at the S&P 500 heat map for the day, NVIDIA dropped pretty big actually. This 4% for stock that is valued at, what is it right now? 3.33 trillion market cap. That's actually a lot. It's basically this move alone wiped out almost $150 plus billion off this stock's market capitalization. Just this move alone. So the question here is right now, a lot of people could be asking, is it a good discount? I don't know. You ask yourself, or I don't know. I don't know how in general like people go about getting in, but this stock year to date 174% up. We still have one more month to go until the end of the year, and can it go more to the downside, or can it finish the year with a bang and maybe go back above 150? So first, I'll take a look at the option market, and we'll take a look at the overall, what is the S&P 500 components, these chip makers, how they are performing. We know today every other chip maker was positive, but year to date, what's the situation? So we know the leader, NVIDIA, Broadcom, I have already brought it up, but again, Texas Instruments 20% year to date, Micron 22%, Intel 50% down, everything else actually down year to date. AMD 4%, Qualcomm positive 9.8%. So is this the best time to buy? We know that they reported good earnings, maybe slightly below guidance, slightly. But again, the question is it a discount? My opinion is that from here, by let's say January 17th, another 2 months, or maybe even by the end of December, the stock can pull back a little bit more. Why not 20%? We know 10% is a 10%, and all the way up to 20%, it's a correction territory when any stock pulls back from its highs, from its all-time highs. At the moment, NVIDIA 9%, and if it drops around like 22%, well, from here, it's going to be another 15-16%, all the way to 115, that would be 22% decline. Would it be the 200-day moving average of the stock? Would it be the better deal than buying it at 50-day moving average? So that's the question. So let's take a look at the probabilities, but before that, I want to go through the statistics of the option activity. If you're somebody who trades options, we know this is pretty options-driven stock. And so far, if you take a look at the call activity, look at it. 3.2 million calls traded today versus only 1.2 million puts. So what does that mean? Does it mean a lot of people buying calls thinking that this is enough? We can go basically place bets into the year end and take this thing up to all-time highs. Possible. But I look for volume traded at the bid or at the same time traded at the ask. So if you take a look at it, 40% of that flow traded at the bid, so which means selling premium, and another 40% traded at the asking price. This could be a bunch of spreads being placed, right? And then also 18% traded between the market. And also if we come down to the delta, 40%, almost 70% of all this delta between 0 to 40, which means maybe from the get-go in the morning, people were selling the heck out of calls again on this name. And also by having still volatility is not too high right now. Earnings is out of the way, but we have a Fed this week. What do we have also coming up? Even though it's a short week, we do have some events on our hands. So it looks like GDP. We have tomorrow consumer confidence, home sales, and then we're going to have GDP. And then do we have a FOMC? Yep, which is tomorrow. So it looks like they moved it from Wednesday to Tuesday, which is tomorrow, 2 p.m. And also after this, of course, into this again, despite stock being down, and also the fact that the stock moved 4%, nothing unusual. NVIDIA has a $5.42 average true range. Looks like today's move was $5.90. Nothing unusual for the stock, which is volatile. And that's why I think a lot of these people who are trading options, they're taking advantage of it. Again, still, before the earnings, they sold the heck out of anybody who sells premium. It could be you, one of you, or many of you who has this strategy. You own the shares and you sell covered calls every time you think the implied volatility is elevated. So, but ultra short term for me, in order to go any stock long, I look at the 5-day moving average and 20-day moving average. At the moment, if you take a look at this stock, these are the two moving averages that I have. This gray line, 5-day, this blue line, 20-day. 5-day, of course, downtrending, 20-day, moving sideways. Not a good spot for me to get in, okay? And again, this is purely my opinion, but this is a support. Can it see some sort of a bounce? Absolutely. It can go right back into 140. It can go back right into this supply. But we know now at this point in time, this area is pretty heavy supply area. So we're 150 is a pretty big call resistance. Is there a put support somewhere sitting? Sure, but I'm going to take a look at the January next year and say, what is the probability? So let's go back to the probability of the stock dropping another 16% and trading around like 130 something, 120 something, 115 actually. So let's say 120 call, 120 put, January 17th, 2025. So looks like today 12,000 contracts exchanged hands and 42,000 open interest sitting right there. And probability, according to option market, 24% probability of that happening. So is it a lot of probability, or is it not a lot of is it too much or is it too little? It's for you to decide. You can go take a look at it yourself. It's just purely option activity. Based on option activity, what is the probability of the stock finishing right there? Or January 3rd, if you think if you're bullish, you can take a look at the 150 calls expiring January 3rd. There's not much of a volume. Today, 4,400 actually traded, a little bit more. In this expiration date, this is the highest traded option activity actually, 150. I don't know if it's bought or sold, but probability of that contract being in the money, which is going for 275, 293, is 22%. So that's how I look at it when I'm trading options with large cap stocks like this, because there's a lot of volume, and this stock has been the highest options traded stock, most active options traded stock for many days. Almost 99% of the trading days, literally maybe even every single trading session, NVIDIA was the most actively traded option stock in the market. If you take a look at it today, second largest, Tesla, not even close. 1.9 million total volume versus Nvidia 4.4 million. So again, as long as it has these sorts of ranges, institutional traders will be basically milking this up and down. And if you're a directional trader like me, it's a little bit hard to trade, make money, unless you have the underlying stock, unless you have the shares. It's a little bit different. But also, if you utilize credit spreads, maybe you can make money. But the point is, it's pretty hard for me to be looking for like big plays, which I look for usually 500%, 1,000%, 1,500%. I don't think I'm seeing anything like this. But if it cracks that 50-day moving average, which is at the moment 135, and if it cracks 130-ish, 132, I'm going to be definitely trading it to the downside all the way to 115. Because I think from here right now, the support for Nvidia, this 50-day moving average, wherever it closed today, 134-ish, 134.50, and then it would be 130. Below 130, I will be definitely looking to play it to the downside if premiums, again, the options are relatively cheaper for my liking. But that's my thought regarding this stock, and you decide for yourself whether it's cheap or expensive at these levels after pulling back 9% from its all-time highs. So that's the video for Nvidia. Thanks for watching. See you in the next one.